Welcome everyone to another video here with Invest for Tomorrow, and we're going to talk about wish.com. A lot of investors are overlooking this one or avoiding this one because they're a little uncertain with their balance sheet. But we're going to jump into why this stock could possibly go 5x all the way up to 10x in the near future. When I say near future, it does take some time, but 5 to 10 years is pretty near when it comes to the life of a stock. There's a lot of stocks like Apple, Amazon that took 10 to 20 years to see those results and make those stocks run up to newer highs not seen before. So Wish has potential. Let's jump into a chart here of the Dollar General. So a lot of investors aren't aware of Wish, and if you look up many different articles, they're going to say things like Wish is the dollar store on your phone, and it's an e-commerce platform, but you can buy cheap, convenient, quick things right away at the cheapest price and go ahead and obtain it through that platform. So here we are with the Dollar General. The Dollar General in its infancy, when it first started and debuted, was back here in 09, and it was in the 20s range, like $24 and some change. It hit a high recently of $225, and it just dipped to $186. So that goes to show me some insight of the dollar store capabilities, opening a dollar store as a retail store, but a dollar store that's the e-commerce platform, how things are revolutionizing. That 5x, 10x can come a little bit sooner, but we could see that happening in the next 5 to 10 years as long as Wish finally can turn over a profitability. So it took some time so far for it to build its name, but it has not officially become profitable. And that's one of the things that you definitely want to look out for. But this stock has the potential to 5 to 10x if their business model is fixed or aligned with the expectations of investors. So let's go over here to institutional ownership, and you will see some big players here in this stock. So right now in the top holders, there's two over 100 million shares, and the third place is 76. And then we have one with 62. And these institutional ownerships are loaded up, right? They want to own as much as they can of this stock. Let's go ahead and see the ones that have obtained new positions. So you can see here in the green rows indicate new positions. All of these in the last 2 months have obtained new positions. You can just see how they've loaded up. You could see how much has been happening from institutional ownership in the last several months. Now, one of the ones that caught me by surprise with how many they own is over here with Goldman Sachs Group. They own 209,000 shares, which is interesting. We also have Vanguard here with 300,000. And then as I went up, and you could see it here, Morgan and Stanley, they're a little bit more conservative. They own 6.3 million shares. That's a pretty bold statement on their end. Also, BlackRock Group owns a position here in the company. So let me go ahead and search it up here. And you can see how Vanguard has been loading up in the last several days as well. But BlackRock here, you could see that they own 2.8 million shares. That right there is pretty bold as well. Very interesting. And institutional ownership has gone up tremendously in the last 2 months. And now at the beginning of March, Vanguard took advantage of the dip and they've loaded up on some shares. So another thing too, I want us to look at analysis ratings. And analysis ratings right now, based off of the current price, it's sitting at $16.99 as the market closed. And the low end is $19. The average is $24.90 and the high is $31. There's a 9 buy rating and a 3 hold. That right there is pretty bold as well. Should give you some insight on the outlook of this company. And just looking at this graph of the Dollar General, and if you look at other e-commerce platforms, very interesting to me. Now, the Dollar General is a market cap of $45 billion. I'm not sure if the valuation of Wish is a little bit higher than it should be. And if it's correct, I mean, this does have a lot more room. And the valuation here is $9 billion as it sits right now. When it was way up here close to the 20s, it was actually worth $11 billion. So we're going to have to watch closely how that market cap goes if it starts to do a reversal and pull itself back up. But currently we're below analysis ratings of $19. I mean, this stock here, with the business model and everything that it sits in and the potential in this sector, it's going to be a big deal moving forward. It's just a lot of investors are overlooking it because the parent company is called Context Logic Inc. and no one really knows that Wish is owned by that company, and a lot of people just know Wish by wish.com. If you don't know much about the company, check out the website. As always, guys, all I ask for return for my information and time is you hit that like button to let me know you watch this video, share this with your friends and community, and stay tuned for the next video. Let's make some money. So here we are with the S&P 500 index, and after having such a big dip, quote unquote correction so far, after hitting these lows down here of 37.23, it seems like we've seen the bottom for now. Now, I want to emphasize for now because we have many other events coming up next week here in March with the Federal Reserve meeting, and if the market does not react sensitive to that meeting, the next meeting is in April, and we want to be aware that year-over-year inflation results and numbers will be coming out soon, and we need to be prepared and aware that if there was to be a correction, I don't think that we're going into a crash. If anything, it's just the market becoming sensitive to certain numbers and certain things. Now, we've seen the market see itself become very sensitive when the Federal Reserve has come out to speak about everything that they want to reassure us in as investors and the public, and it still has made the stock market go a little bit lower when they've reassured things. So we need to see how the meeting goes and how sensitive the market reacts to it. But let's look at this article. So it says here, 10-year yield falls after Treasury auction demand is adequate enough to ease investors' fears. Now, we can read on about this and it'll show us all the different changes, but literally the heading is exactly what we were looking for. We wanted the Treasury auction demand to be pretty well. Now, it wasn't as great as it's been before, but like it says there, adequate enough to ease investor fears. And you can see here the 10-year note just falling downwards throughout the day. And we can see here how it ended at 1.53. So we want to watch this carefully. If it could just kind of stay sideways, that would be a really good sign. But if it actually just dips a little bit more, even better. But we don't want to see any spikes in this because that would show us volatility again and in the market if they're still correlating. Because remember, we've talked about the detachment could come in the near future, and whatever goes on with the Treasury yield won't do much of an effect to the market if the market is feeling optimistic, bullish, and institutional investors are loading up and individual investors are loading up as well. So we want to be aware of that and pay close attention to how they correlate or if they finally detach. But the main thing I want every single investor and viewer to be aware of is that yes, this run is because of the easing on the demand of Treasury yields going up, easing the pressure on investors. The market's going up, optimistic, hopeful. Stimulus is going to be passed. That's in the works. Now it passed the Senate, it went back, and it's in the works of finally officially getting closed out and probably going to become official once it's signed. And then we have the yield actually sitting at lower rates and sitting sideways. As long as it doesn't spike up crazy or anything like that, the lower it goes, it might be even better. But even if it was to just hang out sideways or kind of consolidate up and down, getting close to 1.54 and coming right back down to 1.52, that would not be something of a concern. If anything, that will look kind of healthy when it comes to the 10-year Treasury and bond purchasing and so forth. Well, right now, the market is upwards. We want to be aware of these dates. And as always, guys, if you learned something new, subscribe to the channel. And if you find this helpful and informative and you want other investors and viewers to be aware, share it with your friends and community. And don't forget to hit the like button, guys. I really appreciate that. And that's the best way to let me know that you watched this video. So as always, guys, Thank you guys so much for watching, and let's make some money.